Quite a decent day in treasuries today. So we'll run over what we're seeing. It's quite an interesting day actually in treasuries to end the week, considering there's not that much data. We went bid overnight. Market opened. We'll zoom in a little bit so you can see. Market opened up here. We had the housing starts and building permits that actually came out as a big miss, which should in essence result in a bid for treasuries. We did go bid at the start. Market shrugged it off, and then we essentially cracked the 30-minute lows here, and then we sold off. Michigan sentiment came out hotter than expected, and then we continued to sell off back down into the previous day's point of control, and then reversed back up where we're probably going to fill out something like, evens, probably like here in this kind of range. We'll roll out the finish. Let me know how your week's been. What's been happening with everyone? How's your trading been going? Did you guys manage to survive the surprise numbers that came out yesterday with retail sales and the jobless claims that come out, which is less than expected? And then we had the highest print in retail sales this year, 1%. Be interesting to see what that's revised to. Jengi, hello buddy boy. What's happening, dude? We'll jump into treasuries in a minute when some more people join. I think today's session, I think we ended the day, I think it was 16 ticks on treasuries, so a pretty good day today. Candleman, how's it going? How is it going? So yeah, just look at the footprint. So I know. So we saw this huge big bid that come up. I wasn't at the charts then. This is about 7 a.m. New York time, where we saw literally the whole curve was just bid, and we left this imbalance. Then we went up. I've got this imbalance up here. This is from the job reports and stuff that come out, retail sales imbalance. So the markets basically went back to test this area. We then saw the building permit come out, couldn't crack here, then we sold off. And this is in essence when the Michigan sentiment number came out. I was actually selling into this because I was anticipating if it was hotter than expected, treasuries would basically continue dump. So that was one of the trade plans for the day. Yeah, exactly, dude. Exactly. I had a pretty good week yesterday. Yesterday didn't trade that great, so didn't have a winning day yesterday, but kept it manageable, which is the main thing. So ended the week green, which is always good. Which is always good. Um, it would have been much better if I didn't take some losses yesterday, but that's the way the cookie crumbles. So I suspect we're going to need to clear off this cumulative delta. This is a cumulative delta for the session here. We're negative 16 K here. I'm just going to go back to the start of, I think it was here. Yeah. So 42.5K overnight session cumulative delta. It's a lot. So we're basically flattening out some of that, to be honest with you. So technically we're still positive on the sesh. which is why you're just seeing a lot of this dump off as well. Nice. Well, that's the thing. That's the main thing, dude. That's the main thing. And you need to bear in mind as well, man, that this is summer months, right? So it's not exactly going to always be the cleanest flows, you know. We've seen pretty good ranges in treasuries this week, to be honest. Yeah, let me bring up indices. We'll see what's happening. I'm going to save this, and then we can close. And then we will open. So we'll catch up and see what's happening in ES land. Okay, so the market took it. The building permits that come out at one, it took it pretty negative. Wow, that was a good trade. Holy smokes. Yeah, so that came out at one. It just absolutely. No, it didn't come out at one. It came out at half one. So it dumped prior. Okay, ignore me. It's not a good trade at all. I thought this was the area here where it just then dumped. Okay, pretty one directional overnight session. And what happens when you get an overnight session? It's extremely one sided. RTH loves to correct. And then we sweep the overnight high and back into value. I should have checked yesterday. This is textbook stuff, this. Did anyone catch this sweep here? If I was to get a textbook out and frame this would be it. Dump in the overnight, correct. Some size coming in here, and then we just sweep down. Gory stuff. I mean, it's been taking a while though, so not the easiest to hold, but still a good trade nonetheless. Delta's pretty flat as well. Yeah, I mean, look at that. So all of this selling to get all the way down here, and the delta that came in was negative 2,557. So just no bids there. It's not like they've had to push very hard, is it? Then I've just bought it back up. So it looks like a day where not really that much size has been going. Did you guys take any trades in ES today? Let me know if you did. Also, if it's your first time watching, say hi. Hit the like button for me while you're at it. Let's have a look at the market profile so we can see what's happening. Okay, so we'd said last week, let's get rid of this. Some of these as well. Okay, so we'd said last week, the world was ending down here. This low's not going to be touched for a long time. So last week, the world was ending down here. Market goes bid back up. We finished the week basically at the gap, and then we just went, straight bid again here. Wow, this has just been straight line stuff, isn't it here? Okay, so interestingly enough, This is the regular trading hours, and so is this. They've not filled this gap yet, and they've not filled this gap yet, which is interesting. I'm going to quickly go in and go to the volume profile monthly here, and then highlight point of control. No, so it takes it away from the chart. And then we're going to go to end of period for this, so it makes the chart look a little bit less messy. In fact, sorry, I'm on the wrong thing. It's the general TPO. So we're going to go in here. There we go. So you guys can see it's a little bit clearer. There's not so many lines. Why is there twos here? That's very strange. That's away now. Okay, great. Jeez, oh Tom, I hope you're alright. Wow. There you go, okay, dude. Difficult day today for you. Took 3 trades in MNQ, got around 150 bucks. That's not bad, dude. Not bad. Did you have to really fight hard for them, or were you emotional? What was difficult about it? So we kind of have. Let me just get the rectangle out so you can see this. But we've got this uh, extremely high volume node here, right? And the market's left a gap. So if we draw that from here, to here, I wouldn't be surprised if this gap gets filled. That's not going to be today. And we are at quite an important level here. If we just draw this up, we're at quite a key level. It's the high from 2 weeks ago, and then we're kind of then breaking. If we do break this high, then we're not too far away from all-time highs here. Again, this is all-time highs up here, right? On this contract, or am I mistaken? I think it is. You're getting a reading direction. Yeah, that's always the case, dude. It's even harder on NQ, I suppose. Um, and then there's this gap down here that's not been filled from close to open. So we've got from here to here, it's not filled as well. I'm going to extend these because it's quite annoying. So very very typically, I like the gaps to be filled, and in a normal environment. Just something to look at. There has been so much volume traded around here, man, and the fact that this is a real high volume node here, expect this to be revisited. Because does this is a question to ask yourself. If we crack this high, right? I'm pointing this with a pen, like you can see it. If we crack this high here, right, and then we approach, all the way up here, does this feel like a time where we should be even approaching anywhere near all-time highs? Probably not. But at the moment, whereabouts you sort of fading. I mean, buyers are just in complete control. Today's been a really nothing burger, to be honest. Kind of went bidding overnight. There's not really one-sided delta either. Um, I'm going to split these because these are okay. It was just a few. Okay. Yeah, so a really key level here that we need to then break. We're not too far away from. Not going to do it this session, of course. Okay, so with that in mind, we know that the market is most likely not going to be reaching here, above here this session. If it does get above here, which seems a world away, just so we're aware how many tickaroos that is, that's 80 odd ticks, 90 ticks, never happening this session on a Friday close of play. So most likely we're going to be finishing in balance. Let me get my pen out so you guys can see that. Okay. Okay, so Friday balance. I would probably say if you've not already made your money, uh, you kind of should have to be trading. So as we discussed, we went bid in the overnight. Sorry, we sold off in the overnight, and then we essentially went bid just to open, which is the correction that in essence happens. And especially on a Friday when you're expecting balance, you want to be taking mainly the sweep plays. So any sort of high and low sweeps is the sort of areas you want to be taking. I'm just drawing out the extremes as an example because we've got this real high volume node here to protect, and then you've got this up here. But these are just completely out of contention. We're more likely to hit this one here than we are, anything up here. The chance was when the Fed talks were happening, but nothing exciting was discussed. So then we jump into the DOM and we'll see what is happening. Pressing the wrong buttons. Let me know if you get any questions about that. And let me know if you're thinking of taking any trades, whereabouts you plan on taking them. Lulu, how's it going, dude? Yeah, green day. Any green day is a good day, especially the end of the week as well. Nice one. Daniel, what's happening, dude? Last one, long 75s. Do you long POC and did you catch this popperoo up here? Yeah, I don't really see very much happening. Delta is now completely flat as well. Here. Uh, there we go. I'm shocking with the mouse swirls here. So yeah, normally one of the plays, as you guys know, is if this number is extremely one-sided and you get to the close, then people most likely need to start doing business because only 5% roughly of the trades are going to carry over. Oh, nicely done, dude. Nicely done. That's what I like to hear. Now make sure and keep it. Keep the funded one, whatever one you're trading with. You can actually see the VIX now has dropped as well as to how thick the book has thickened, you know, because it was too thin before. Far too thin. Completely different way to analyze the flow that comes in. Sellers have just hit that. hit the 100 bid. Okay, so for buyers to have any form of bid to get back above here, I would like to see them, hold here. I don't really want us to return back into point of control area here, because if we do, then it's more chopperoo. So we want to see some buyers step in here. So 122 absorbed. Let's see if they continue on. See if they take this 100. You want to see them take this with some size, ideally, because if they go up and hit this liquidity up here, I don't know if this is the ghost algo, cloud algo. Yeah, it is. Yes, he's still there. No more trades for you. Closed the day trading hours ago. Better protect those gains. Exactly, dude. Oh, so we could. Is that expiration today, dude? Nice, Jengi. Well, that's the way to do it, mate. I did the same about when did I finish? I finished at, if I want to put it into New York time, I finished at 12, half 12 New York time. So about 5 p.m.ish for me, which is good. I need to, I still need to review today's trades and stuff, but I can't remember if it was 14 or 17 ticks or something like that. I think it was 17. I need to check. Yeah, exactly. Hopefully we get a beer. Rosie, nice action on gold today. Oh, is gold all-time highs? Ooh, is it? Wait, wow. Um, by any chance, right? By any chance, how did the yen perform today? By any chance, is that? Let me see that. I wonder if I've got that up. I'm going to go into Trading View where we can view multiple things at once. Trading View. I'm going to go into the super charts and I want to see. Yeah. Okay. So basically, Safe Haven's just absolutely mooning today then. Wow, all-time highs on gold. Jeez, oh. Interesting. Wow. There's me saying gold's a shit investment as well. But to be fair though, you've been doing nothing for the last 5 years. So I suppose it's got to go up at some time. We're in that gold mania now. Everyone will be telling you to buy and sell gold soon. Wait till it gets mainstream in the the all the mainstream news channels cover it, and then your gran will be telling you to buy gold. Interesting that the carry trade is getting whacked. Oh, so it's today. What? Wow. Okay, so there could be some action in the close. Interesting. Interesting. If you get any, what's your play on it? If you get any bias towards what you're seeing, or are you just looking for the volume to pick up to trade it? Hopefully it picks up because this will be. There's nothing going to be happening here. We've got, sweep here to potentially go up. I think the ranges are going to be extremely tight until some volume goes in. What are you trading? Are you trading ES or NQ? And on your goal position as well. On the goal position, I mean, this is the thing, mate. It's all very well to look at it in hindsight and see it's pumping the high. You don't know what's going to happen. If you did, you wouldn't be here. Well, that's not saying that. You maybe still be. I call this the Mr. OrderFlow stickman pattern. You know, whenever it comes down to his arm here, he lifts it up, right? Do you see this? So you draw this, and then he lifts it up, and it's literally the most precise strategy ever. He ticks it, and then he's just like, we. uh, Good. That's what I like to hear, mate. Pull his pants down and check his face. I like it. I like it. Exactly. That's a bit as useful as it, to be honest. It's probably got a higher hit rate than that fair value gap, to be honest. 72% of them are blown through, and people look at them. It's crazy. Like, I know context is everything, right? But you might as well just not include that part, Or if 72% of them fail, draw them, and then whatever else confirms it, just fade through them. Yes, 72. Yeah, 72% of them fail. For every failed value gap is drawn in the 5 and 15-minute candles, 72% are blown through. That's over the last. That's on NQ and ES. 5 and 15 minute collectively. It was thousands of occurrences as well. It was a small sample size or anything. Oh no, I don't know about confluence or anything about it, mate. I just know that I ran stats on um, anytime a 5 or 15-minute candle shows up an NQ or ES for a fair value gap, it fails or the market blows through it 72% of the time. Over, I think it was a couple of years of data. Same reason that I can tell you that um, if Treasuries breaks the high of the previous day, so about 80% of the time that it will close above the previous day settlement, or it closes above and below the favour of the break on the 10 year. No, I think there's an actual name for that as well. It's called an I don't know, what's it called? Inverted fair value gap. This is the trouble. The guy has literally mastered the art of bullshit. Like, you know, every single drawing that he does, and now he's got NWOGs and VWOGs or whatever, right? Every mentorship, there's a new stupid fluff term that comes in. And now you're at the stage where there is so many. Some sellers are coming in here, not really that much delta, just the bid has been pulled. Check the lack of contracts hitting into clear. Um, we need to break POC, mind you, which we don't really do with very much ease a lot of the time. Um, but the fair value gap side of things and all the different terms. I mean, if you can make it work, then happy days, right? But the problem with it all is if one doesn't work, then it's like, well, you shouldn't have used that one today. It's you used that one. I mean, the prime example is there's a fair value gap and an inverted fair value gap. Do you know what I mean? How is a novice that is just learning that stuff gonna even understand the difference between that? You know? Yeah. Yeah, I mean, nothing should be that complicated. In my opinion, when something is made extremely complicated like that, it's made complicated for a reason. People look at numbers on the screen like the DOM and they think it's really complicated, but once you understand how to read a DOM, it's actually extremely simple. But you need to. There's a lot of rubbish online, if I'm completely honest with you. Um, including to actually read a footprint. A lot of people don't understand that the market interacts in a diagonal way. It lifts in, hits down. You know, just as a number one. That's the number one thing I see people not take into consideration, especially when looking at a footprint. Because if you look at prices, horizontally on the footprint, it doesn't actually to form the footprint like that. It doesn't get formed like that. Whereas everyone looks at it, you know, if you look at it in the past tense, you would see what happened to the bid and offer horizontally, but actually it doesn't get formed like that. Do you know what I mean? Yeah, exactly. I mean, anyone that's been new to trading in the last couple of years, they don't see all the stuff he was doing with forex and stuff years ago. I mean, the guy started in forex and then goes into a completely different market and then is like, oh yeah, my stuff is the same. I mean, realistically, it's just support and resistance with some sweeps in there, with a million different concepts whacked in, and then he's put in some imbalances, but then he's not actually measuring the complete, the correct imbalance. That's the hard part. And my reasoning for showing the fair value gap stuff was it doesn't take that into consideration. You can't determine what an actual imbalance is without knowing the flow that goes in behind it. It's literally impossible. And correct me if I'm wrong here, but so I've heard a couple of people say this, right? Where they've said, but you know, an order flow imbalance is not the same as a time and price imbalance. What is a time and price imbalance? How is that even a thing? A time and price imbalance. Someone enlighten me what that even means. Because in my eyes, It's not a thing. The only logical argument I can think about that is, the market opens at a specific time and there's more orders, but that's it. But they don't mention that. It's Oh, you're kidding. You're kidding, Daniel. He's not using market profile now and changing the name. You've got to be kidding. Oh, right. Okay. Yeah, so TPO is not what they're referring to though. They're just looking at a candlestick chart. That's not a TPO chart or market profile. It's not even the same thing. And actually, that's more about value areas and volume and what we've got here. Like I'm being serious. I don't even think it's even anything to do with that. I think they're talking about they're literally talking about the time and price as an imbalance because he calls a kill zone at a random time in the day between 2 hours that he says, which is probably going to be the open of each session when volume kicks in. I don't think there's any logical sense to it, if I'm honest. Because the trouble is, you can go to a 5 minute chart and there be an imbalance, but then go to the 6 minute and or sorry, a fair value gap or whatever other term, and there not be one. 7 minute chart, there is one. Do you know what I mean? It just literally depending on how the candles stop. Depending how the graphical image looks in the chart. The only way you'll be able to spot an actual true imbalance is an imbalance between buyers and sellers. It's got nothing to do with the chart. Yeah, exactly, and that's exactly my point. So if you're trading NQ, which the majority of people are, and they're looking at that, I mean, you can literally go, to a 1 minute time frame or a 15-second different time frame, and that imbalance not be there. It's so subjective. Yeah, no, I'm with you, Kyle. I think there's just it's almost like just getting a word salad. So this is the thing. The guy brings up a naked chart and talks about sweeps and liquidity, and everyone thinks he's a god. Do you know what I mean? It's crazy. It's like, oh, the market sweeps a level and then goes back into value and then goes to run the stops at the high because the net long from a certain area, and everyone he's like, oh, it must be because the total super is a fair value gap before. You know what I mean? It's absolutely bonkers. I'm not want to turn the stream into that, but I just think that the ideology of it is so flawed. Another thing as well is he's kind of ruined the word liquidity. This is liquidity on each price. I always get tons of flack for going on about it, but yeah. Anyway, we won't turn it into that. But no problem, Daniel. I'll check that. Let me have a look and see what you've sent, dude. I'll just do it on my phone. See what you sent. It definitely sounds like he is doing some World of Warcraft thing. Right, so Danny, what am I looking at here? This is just fair value gaps, right? The trouble is with that as well is, again, are you buying the test of it, the middle, the bottom, a sweep of it? Is that a fair value gap, whatever you've sent me? Yeah, it is. Alex, how's it going, dude? Yeah, the 5 minute. Who did you find, Alex? Oh god, who's saying that? Yeah, exactly. Trade into them, mate. The idea that entering after you see the big order is entering too late. Oh, I don't know. Well, the thing is, we trade OrderFlow, so you understand that when you get proficient at it, it's the most efficient you're ever going to be in trading. Oh, I know who that is. I know exactly who that is. That's yeah, some guy that's basically selling an algo and or whatever. I think. I think I've watched one of his videos before. The thing is, anticipating. So say for example, anticipating a break. You know, Treasuries was a great example of this today. It happened twice today actually, where before the market opened, Treasuries every single, the 2 to the 30 year was absolutely banging the highs, just continual lifting, reloading the offer. Now one of them is going to go first, right? And it gives you a clue for that. And then you're obviously going to say, right, if they do take this, then they continually hit it. I'm going to be instantly on side, so it's a good position. And then they did the same when they basically broke the 30-minute low from the open on Treasuries. I think the 5 year went first. I know that what went first because I was watching it and I actually sold into it, and then it just continued to go. Now, anticipating the break is hard because you kind of need to see whatever markets you're trading. As an example, in indices, you want to see NQ cracking the high, you want to see it sustain, and then you want to quickly jump on ES as that's happening. Because NQ will typically go first just because it's more volatile. Oh, MT5 algos. Oh no. No, 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 no. Absolutely not. I mean, they can definitely work, but you need to tweak them like no tomorrow. And of course, you can't have any. Well, it depends on the market you're trading, right? But you can't use any order flow for you if it's through MT5 or whatever. You found over time that it's getting harder to anticipate the fake out move. What do you mean when they're going to sweep? You mean like, are they going to crack the level and sustain it, and bid it up, or are they going to take the high and sweep it back into value? What do you mean? You guys can hit the like button for me, please. There is 10 of you lovely people that have hit the like button and 32 watching. You need to get that closer to like for like, please. So like right now, okay, quite a key level. We're just approaching value area high. We need to see ES bang through here. However, NQ is working its way down. In order for this to continue up, you want to see NQ be up like here. Obviously, the Dow over here is approaching the higher session, which is always good. It's what we like. We want to see correlations across the board. Because if they do take this, then there's going to be some stops up here that they can grab up this level. And then now NQ is just dumping, so no bueno for the time being. I don't really know what you mean, mate, in terms of the volatility in pips during a fake out. Do you mean how far they run it past the level? So instead of going to here, they go like way up here as an example. They don't sweep it back up with ticks. They hit it much more and then drive it back down. Is that what you mean? Instead of just sweeping it a little and then taking it down? Is that what you mean? I pay absolutely zero attention to fibs. Zero attention. I very simply, check single prints in a profile, because when they're revisited and they crack through them, they offer good levels and a quick move. I obviously look at high volume and low volume nodes, sweep levels. Then I like to use market profile as well, but I never really use anything to do with fibs. Everything is volume and order flow based. Then with some market profiles, I like to look at the market in that way. Yeah, that's just never going to work, man. You can't enter before the sweep or whatever. You need to wait until the confirmation. Do you know what I mean? Because you don't know how far they're going to bang it, or if they're just going to run through the level. You don't know that, but you need context to understand what's the most likely scenario that's to occur. Well, most likely it's a Friday for right now. Okay, there is not really any delta there, and most likely when we sweep a level, it's got a higher chance on a Friday close of play with no date in the calendar just to return back here. Do you know what I mean? Whereas you know, if it's Tuesday, loads of people are there ready to do business, you know, and it's cracking the lows, and you've got correlations working in your favour, and there's some real size coming in with some delta flows hitting the bids, that's got a much higher probability of it going through the level than sweeping. It's all about context. And you need volume. You need to know the volume to crack a level, right? So just say for example, market open, you know, it trades, I don't know, 200,000 contracts or whatever in a, you know, in a 50-minute period. These numbers are relatively arbitrary, but I'll just give you something along the lines of treasuries. That's typically what it does, the 10-year anyway, right? And then, you know, towards like right now in a 50-minute period, you're probably trading something like, you know, 20, 25k, something like that. So from a volume perspective, there's not enough oomph and it's not volatility, that's the wrong term. There's just not enough business been done in order to sustain that breakout, because most likely someone needs to get out of the short if it's approaching the low, right? So they start getting out and they start getting out on the bids, right? And then you'll have people that'll be stepping up, and then they'll basically lift back into the offer, and before you know it, you're back in value. You know, you need to take all of that into consideration. And every single day you can check the data on this, but every day has a slightly different ATR as well, or ADR, depending on if you're taking into consideration gaps or not. I mean, I would like to. I don't know. I think, mate, that you need to know. Forex is hard, mainly because it's not centralized and you don't know the volume that comes in. Forex is good for like longer term plays where you can hold overnight and potentially collect some swaps. You know, like playing the dollar yen carry trade or something like that. You know, that can work nicely in FX. Um, but you also, the trouble is with sweep levels as well, is you pay the spread to get in and you pay the spread to get out, and you pay commissions. So if you set out a limit, right? Say you set out a limit, you know, here at 81 and three quarters, right? And you're looking to sell here. In Forex, you don't actually get filled until the market gets, you know, four ticks against you or whatever. You don't get filled till you're here. So you're instantly offside. Just a massive disadvantage. If you enter on a limit in futures, wow, they just really, really pulled that bid there. You see that? If you enter on a limit in futures and someone hits your, you know, hits your offer if you're laying it out, you don't pay any spread. You only really pay the spread when you're marketing in. The spread is shown by the white boxes, by the way. It's normally a tick spread on ES. NQ is different. Hopefully that makes sense, dudes. And for me, for taking sweep levels, if I'm honest with you, if I was to be taking sweep levels without knowing the delta flows, the volume that's coming in, where is a fair value price, I would be guessing, to be honest. And you know, there's enough tools available these days so you don't have to guess. You know, your objective on all of this is to basically give yourself an edge that's better than a 50-50 coin flip. Bonaz, building this is false breakouts. Do you look for aggressive counter inner prints to show that a serious seller buyer is trying to push price back? Do you need that order flow confirmation to take a false breakout trade? Yeah, so um, I'd like to see the order flow up here, right? This was the high. What you'll see typically is the market gets to a key inflection point. It happens at overnight highs and overnight lows a lot, right? Or previous day highs. And just as another point, if the previous day high is, within kicking distance of the overnight high, don't fade the overnight high. Wait till the market gets to the over, sorry, don't fade the previous day high. Wait till the market gets to the overnight high. If it's absolutely miles away, then of course take the previous day high. Do you know what I mean? Like I'm talking if it's, something ridiculous, like 100 ticks away or something. Um, so, hi Tracy, I'll answer your question in a wee second. Um, so in order to confirm that, Boraz, when the market comes up to that level, say here, right, and you're anticipating because you know it's a Friday, you know there's no data left in the calendar, as an example, right? There's no data here. The market come up here at approximately, 1 p.m., but around about lunch. So there's probably not going to be enough flows to come in to absolutely obliterate the highs, and to continue in. And this just comes with experience and knowledge of the market. You need people to be there and people ready to do business to continue crack levels. If there's not enough volume there, it doesn't go. And actually seeing this on the tape, right, when it comes in. So if we go down here, there's a couple of ways you can identify it, right? Let me just bring this up. So I'm not even looking at DOM because I don't have that, right? But you have the market, some delta coming in here, okay? Now, delta then cools off, and in order to sustain a continued level here, right, you want to see tons more buying to come in. Probably 3-4k delta needs to come in to obliterate and smash the highs here. It does not. Now, I can't tell you what the order flow would look like in the DOM because this is live in action, but typically you want to see a stop been hit, right, where it blips through price, and then you want to see the offer stand up in this scenario where there is some buying going on, but the offer is basically gobbling it up. So the market came up to this level here, and we traded, the guts of 4,000 contracts at the highs here, could not crack. And then really, this trade in theory should be working extremely quickly. If you get in here, your stop is a couple of ticks above the high because your premise is if this is to sweep back, it should not be breaking the highs again, right? And then you're riding it back in. You're not taking this down to the pits. You're going to be taking it back into the next flexion point. And the next flexion point where you're going to see some resistance is here, literally at the point of control where the most volume is traded because no one is going to be selling up here, especially not large firms, and they're not going to be taking profits down here. They're not going to allow the market to go down this far without taking some off because there's always going to be two-way trade at these levels because it's the most volume in that period. You with me? Lumen, how's it going, my man? What's happening? How's your week been? Tracy, how do I know bullish or bearish the streaming? Um, so there's a I'll put the in the description of the video there is a playlist that runs through everything from what you're seeing. Runs through everything here. Here's the playlist. Work your way through it. Hours and hours of content on there for you to check things out. Delta's doing absolutely nothing at the minute. No real direction. And until ES clears point of control to maybe probe, a sort of step in the profile down here, nothing is on the cards. There's literally nothing happening here. It's a good time to ask some questions. And also, if you would like to support the channel, here's a link. I will pin it for you. This helps my ranting. So it's much obliged. Can you give a pointer on how to set up alarms for large recent bid and ask orders? Um, yeah, you go into your time and sales. Go into your time and sales, create an order and make it above the certain threshold, and then go into your global settings alerts and name the alert, and then you can have it. I've got someone's come in that says, um, ZN sell, ZN buy, you know, ZF buy, ZF sell, for example. I've got them filtered over a certain size. I need to have a bit of a look at. In Sierra, yeah. It's in Sierra. Do you have it in your time and sales? It's um, not that challenging to do, matey. So you need to go to your chart. You need to go to your chart and then open time and sales for that chart, and then you can set up the alerts. No, I don't think it's a thing, mate. The blocks. No, um, you can set the threshold, but of course, with the block, like if it's below the threshold that you set, you're not going to be alerted. You can see it in the time and sales, obviously. Um, and I would always recommend that the time and sales you have it set to do not combine, so you're actually seeing the orders that are coming in one clip, rather than having it combined for price and type or summary or whatever the case is. That doesn't really tell you anything. I mean, it does, but you want to see when someone is actually hitting size that has to do business in one order type. Yeah, it's using MBO, mates. Here is here. This is MBO. I mean, it's MBO is really helpful in treasuries, but at the moment with this algo is on the books, MBO is not as useful in ES at the minute. But yeah, everything I use is do not combine. Um, is I So actually, Daniel, there's one thing. If you're relative, you can do a little bit of coding or programming, right? Is that correct? I've got something I would like you to check. Do you know Albrook's price action? What do you think of him? That's because a lot of people say he's a scammer. Oh, really? Wow. I don't know, man. He's an old man. The guy's like 70. I don't think so. I don't think so. I mean, really, in my opinion, you know, all of these courses that you can buy that are not extremely specialist, it's just a nice way for you to have, you know, content in one place. You know what I mean? And I suppose when you are trading, you don't know what you don't know, so you don't know what to search. You don't know what to search into Google to find because you just don't know what you're doing. So that's the advantage of courses. Just because someone sells a course or whatever doesn't mean they're a scammer, you know, or whatever. But I think people should be made aware about the advantages. The problem is a lot of the time people sell strategies within the course. Um, when it's just a cash grab, a lot of the time. Oh, you do. Right. What I would love to be able to see would be something. Something has been I've been listening to. I want to see if this edge is still a thing. Now, apparently in treasuries, timers is a thing. So after a certain specific time of day or whatever, they will start lifting, say, I'm just spitballing here, but say 50 contracts every 30 seconds or something along those lines, right? Now, obviously, with the naked eye, trying to see this is literally near impossible. So it would be interesting to see run over a number of days of data with time and sales to check on something like the tens on 30 year if this is actually a thing, you know, and if it happens after a certain time of day or something along those lines, I can't imagine that being a thing in ES and whatnot because it's crazy, but it's definitely more of a thing on potentially the tens of 30 year. So that was my question. Um, but yeah, just to wrap up on the Al Brooks side of things, I don't think. I mean, I've watched a few of his videos before. It's the most basic thing ever. He's basically like, is broke the high of the last candle. Buy and place the stop below the low. It's not exactly, it's kind of you just started, to be honest. It's really basic stuff. And there's nothing wrong with that because everyone has to start somewhere. And it teaches you the concepts. And really, the only advantage of these things is you get it all in one place instead of having to go and search things. That's the only advantage. But then you need to weigh up. If you really want to, you can do it yourself for free. It's a difference between having a mentor that you have constant feedback and chats with versus just taking a course that tells you what a candlestick is. Do you know what I mean? Yeah, exactly, Daniel. Exactly. Yeah, exactly. Just get a book or whatever. And the guy was he not like a doctor or something? And this is the trouble as well that I kind of have the problem with YouTube in general, right? Everyone has the opinion that if you YouTube or you stream or whatever, then you know why would you be talking to people and telling strategy or just discussing things? Uh, you're clearly not profitable. Whatever. I mean, it's absolute nonsense. Is it? If you've been trading for years, it's extremely boring. And to be honest with you, if you do it as a large part of your income, it's a lonely job. You're literally sitting grinding away. So and and having people to chat things through with, regardless of your experience in any industry, is going to benefit you. Now, what I don't agree with is the likes of Patrick Whelan or whatever putting out courses just to take advantage of complete newbies that come in because he's got a large following. I mean, he literally probably just went to the team and said, "Go and find stuff that's on baby pips, copy and paste it, and you know, put it into some sort of readable thing and put my tags on it." Daniel, so he said Albrook's post the details in Discord, and I'll bounce ideas about it with him. With it's all right, okay, okay, with the trader coding trader, okay, that's great. Thank you for that, Kyle. Uh, okay, that wasn't for me. That was for Alex. You guys are talking to each other. Nice. This just shows you how crazy the price action is. That we're not even watching. It's been in a 15 tick range for a while. I mean, I'm not against courses or whatever, right? But it's the honest truth of it is there is no way that I can well, teach is not the right word. You can't a lot of the stuff is experience and intuition that you get from just putting in hours. If you've done it for 10,000 hours, you're going to know a lot more, and you just understand. Do you know what I mean? It's really discretionary, but you understand how the market ebbs and flows. You've seen it so many times. It's like driving a car. You get, you know, you can do it without thinking. You know. Now there's one thing you're never going to be completely comfortable with while you're in a trade. Everyone is always a little bit queasy when they're in a trade. But I don't think there's anything wrong with that. I just think you need to be realistic when you go into courses. Um, I think more of having someone to review your stuff, review your journal. I mean, I do something of that nature, and it's more of a mentorship basis. But I don't teach a strategy. Do you know what I mean? I don't say, your new um you're new, I'll show you what a candlestick is. You need to have already been trading and understand it and have something there, and we work on an edge, that type of idea. But in terms of a course, you can do everything for free. I mean, there's so much material out there. I just think for free on YouTube, it's not very good. You know, the only decent stuff I've seen is probably John Grady's stuff. There that's pretty good, but it's getting on. It's pretty old stuff now. You know, markets move in different regimes and so on. So hopefully that makes sense. But just be careful with like everything, whatever you're buying, man. You know, realistically, there is no course. You could give 20 people the Holy Grail, and potentially one or two of them would actually make money because a lot of it comes down to psychology and risk management. And sadly, you've either got the psychology or you really need to work at it. Um, and if Trading in the Zone, great book by the way, but if Trading in the Zone was the answer to success, then a lot more people would be successful. You really need to work at it yourself. Key level coming up by the way, if we can crack through it. It's the lowest we've been in a while. Or we're just going to ride back up towards POC and faff around. Let's clear these prints. So the market got right up to the value area high here last time. Yeah, Alex, that is a very valid point. The number one killer for profitability, in my opinion, is strategy hopping. Everyone does it. You need to stick to the same thing, same markets, grind it out. If you do something and you do like a 30 to 60 trade sample size, review it, see how you're doing. If there is an edge, go for a couple hundred trades. Sample size is depending on your trade frequency, of course. you know. And that's the trouble that I have, and that's one of the main things as to why I created that ICT video, because so many people, I mean, say for example, he's got 1 million subscribers, right? There will be tons, hundreds of thousands of people there that fail doing that, right? And the trouble with that course or that mentorship, and a mentorship shouldn't be, there shouldn't be three. It should be, this is the concepts, here it is. You shouldn't need three iterations of that. Because it's not like he talks about different market regimes, you know. But the problem with that is you do something for a year or whatever, or certain parts of it doesn't work, and then he's like, well, that one that didn't work. It's just a rough time for that part. Try this one, or there's a silver bullet, there's a turtle soup, there's a fair value gap. You need to, there's now NWOGs. You need to include all these different parts in it, and that trade didn't work because you didn't realize there was a 1 hour fair value gap or whatever that was mitigated or some nonsense. Do you know what I mean? So you need to keep it simple that you understand that works for your personality. You need to put the time into it. And really, really, to break it down into its most common denominator, the market, you're either going with the trend, right? Um, and realistically, the overall weekly trend or whatever, we're day trading here, right? Like, I appreciate it's good to do a top-down analysis and stuff, but the day-to-day, like today, the fact that the monthly is extremely bullish has got no bearing on today, right? Just not. So you need you need to have something that is either going to be a trend trade or a continuation trade on a level, key level, or just a fade back in to a perceived value. That's really it. In fact, I'll even break it even down simpler. A trend trade or a counter trend trade. That's effectively it. And then you build your plan around that. You need to determine which one you do better at, which one you don't. Some works better in some markets versus the others. As an example, continuation and breakout trades work better in treasuries at higher volume times than ES. I mainly counter trade ES and don't typically trade breakout levels in ES, as to be extremely specific. Well, Bonaz, you don't need to pay the market anything. You can do it in Sim. But I suppose if you're like it where you can't take a Sim serious, go and get like a 25k combine. It costs like $20 or something. 30, $40 a month. If you can't make money doing that with one lot, you're never going to make any money. That's if you can't manage 2k with one lot, then you know or whatever the number is, 2.5, depends on what platform you go to, right? If you can't manage that trading a couple of micros or whatever, you're never going to be able to manage 100k or whatever. Do you know what I mean? So take your time, build an edge, work on your edge, journal. It's extremely, extremely important. And if you're not journaling, you need to start. Because how are you going to remember your performance from 6 weeks ago? How you performed? How did you perform when jobless claims numbers come out or retail sales was a miss? You're never going to remember that. It's not possible. So you need to be able to look at it and say, how did the market perform last time we had a huge miss or a huge beat in retail sales or jobless claims? Whatever. Or what happened when the last three witchings went on, or so on. All this stuff you need to journal. It's a business. It's a business of data, gathering data and executing it. Exactly. You need to be fast. Would you say a trader could get profitable after 6 months or so and stay consistent? Is it mostly no, no, mate, no, no. I mean, I'm going to be completely honest with you, right? You know, when you go to university, your first 6 months of university is literally understanding what a reference is, right? This is how you reference. Now go to the pub. You know, it takes you 4 years an undergrad, and then an extra year to get a master's. You know, and thousands of hours of studying to really become a quote unquote expert in a field, right? You're not going to be able to, go and absolutely swing from the hill and make a fortune in 6 months. Now, rather than me bashing on everyone's dreams, the reason why that's not the case is because you've not went through different Fed cycles, you've not went through different liquidity cycles, you probably don't know how the market performs, with really good versus really good CPI numbers. Tons of different factors come into play, right? How do you perform when you've lost for a couple of weeks in a row, for example? Can you manage risk? Can you still step up to the plate? You know, loads of different factors come in there, but it's the trouble is YouTube and Twitter make it out as if these guys that post charts and they're making a fortune. No, they're not, right? They're just not. They never post their losing trades. They just don't. Like, I'm just being completely blunt with you here. I would say 90% of people in this game fail, and there's a reason for that. Probably a little bit lower than that, but yeah, 80 to 90% of people fail, and a lot of the time it's because they don't actually have an edge, um, you know, or the specific thing that they're doing at that time is working for that regime or specific Fed cycle, or because it's just going bullish and they're buying dips. You know, when you're in a bear market, how is that going to work? You know, do you have the understanding of what happens when it goes to bear market? Is there signs? Can it be seen on the yield curves? How does the whole market interlink together? There's just so much, mate. Honestly, and it's never going to be covered in 6 months. I could go on and on and on about that, dude. But my advice would be in the 6 months, you need to try and make sure that you have a consistent process, you're journaling your stuff, you're not strategy hopping, and you're continually improving every day, and you're studying the whole market. You know, you want to understand, how is the dollar affected versus gold? How does the whole market interlinked with each other? You know, not saying I look at gold every day, but I'm just using that. You want to understand when I'm looking at news numbers that come out, how I can hit into the bid when I'm expecting it within a standard deviation or it's a miss, you know, things like that. Have I seen Nick Sean on YouTube trades Forex swing trader, average into losers until he wins or gets margin called out? For some reason, he started popping up in my feed. Wow, is that not one of the guys from Astro FX for like many many years ago that was a scammer or something? And realistically, anyone that averages into, I mean, everyone has tried averaging at some point, right? And let's be serious, has it ever ended well? It's basically the strategy of it really works great until it doesn't. You know what I mean? It's a shocking strategy, averaging. Just take your lumps, take the loss, get on with it. You know, not every day is meant to be a stellar day. If you're if you work in an office, you don't have a great day at work every day, do you? And also, you shouldn't be using your P&L as the main reason for having a good day. You need to turn it into something else, like following the process. Sometimes variance happens. You know, as an example, the market is coming to a high. The trade looks great. Everything is working in your favor. You've done your analysis and you're looking to buy the breakout, right? The variance is, when you're slinging in, say, 10 lots in there, right? You're not moving the market, so you need someone else to come in and basically bang it for you. The variance in that is they maybe not show up that day, you know? They maybe not. So you end up having to scratch or take a one tick loss. Just doesn't mean that the trade wasn't a bad idea. Just means it wasn't enough. No one stepped up. Or the fact that sometimes when it cracks single prints and it just absolutely goes, and you get a 10, 12 tick move that you get on like the 10-year, for example, right? And I then, do a victory dance, right? Sometimes it only goes 3 ticks. Sometimes it comes back in my face and I need to take a tick. It's just variance. Over the averages of numbers, you're going to have those trades. But if you don't control the risk, you're not going to see those averages. Averaging into a losing trade is never. I mean, it works until it doesn't. That's the problem. You'll eventually have that one day where you've averaged in so many times, and sadly, even the most mean reverting market will ultimately break out. And when it does break out and you're averaging in to know tomorrow, it is dusto account. Your risk of ruin is crazy. Yeah, that's the trouble, right? And you know, I understand that markets are rotational and mean reverting, but you need to understand the context. And everyone says the word context, but the harsh reality is you don't have a clue what context is until you've put the time in. Until you physically see what the Friday price action is enough around market on close, or when the calendar is light on a Monday or Tuesday, you've got no idea what the most probable setup is and what happens. You need to really know the product that you trade. You know, how is the volume that comes into the product that you trade T minus two on big news events, tier one data like CPI. So I can tell you that probably going for breakout levels, you know, uh, 2 days or a day before FOMC meetings that are going to have an impact is probably not the best idea. They're typically more mean reverting days because there's less volume. You need volume to go into the market to sustain. You need that to sustain breakout levels volume. Because very simply, a large firm or trader or a guy can just step up if there's no volume and just absorb the offer. Now they're net short and they can just gradually feather into the bid and take it back down into value. Because it's not costing them very much money to do that, so why would they not? Exactly. I mean, I'm being completely blunt about it here, but we're actually dumping here. Woohoo! Woohoo! Some movement. See if we go back into this point of control here. I'm going to be kind of annoyed. Surely not. We've really traded this at this area. Come on. Let's go back down to. We didn't even draw out this level. I mean, this can really go here. Let's draw out the sweeperoo. I just don't think we're getting here, to be honest. We need to break previous day high and VWAP and high volume nodes. Nah. Nah. What's Delta like? Yeah, we need me. We need a ton. We need a ton to come in here. I need a ton of Delta to come in, or this is just gonna. Wow. They just hit it there. Do you see that? Oh, did anyone get the time of sales up there? I want to see if that was a big order or not. if anyone has got the time and sales up. If you guys clocked that was a huge hit there into the bid. And yet the bid is not disappearing. Uh, I'm glad you think so. Glad you think so, Daniel. It's taken a while to, it takes a while for traders to understand that. To be honest, just overall what I've been saying. And the objective here, of course, is to try and get people to shorten the learning curve instead of lengthening it. If you spend more time in this channel, there's a higher chance that you can shorten your learning curve than increase it. I can tell you that much. Interesting. NQ barely budged. That's the first time in weeks I've seen that uncorrelate. I wasn't even watching Good Spot, Kyle. We need to check that. Asim, how's it going? What's happening? Might I ask, if the price is in a range after a downtrend and it breaks out with price and delta moving up but open interest is flatlined, what can I interpret? Okay, first things first, I would say open interest, interesting to check if there is extreme one-sided delta. If you have a day like today where the delta's flat, open interest is absolutely meaningless. To be honest, you want to check it on days that's extremely one-sided with loads of volume. And then I would probably pay more attention to your COT reports than your open interest, to be honest. So now that that's out the way, are we talking about a breakout to the upside in this example? So if the price is in a range after a downtrend and it breaks out to the upside with price and delta moving in a direction but open interest is flatlined. Do you mean it's breaking up or breaking down, dude? Yeah, upside. Okay. So in essence, the way you're looking at the COT report and open interest, if you want to put that all together, very, very typically, if open interest is flatlined, and depending on what the previous COT report was as well, okay, you'd want to see that go in favor of the upside if you're taking that break or downtrend or whatever your trade plan is. But from the upside, if you've spent like a day or so, maybe slightly more downtrend in a range, right? Whatever side that breaks, there's going to be um, either long or short liquidations that come in. And when you do get a lot of old business and liquidations that happen, right? The price a lot of the time when it's already really traded out an area is going to go into price discovery mode. Okay, we're seeing some size come in. So hopefully that makes sense. But typically, if I see that the market is in a range for a number of days and it's at key points, it's even more likely that I would want to be taking, a breakout, for example, or extend it on, or trade the break and retest, or whatever the case is. Especially if delta flows are coming in. And of course, you'd want to do it with a day with volume, right? This is shocking price action, by the way. No problem. And the reason why that you need the breakout to happen like that, you're going to need enough size to in essence get it from the middle of the range to the high of the range, right? To value area high as an example. Then you're going to need more size to get it to the highs. Then you need even more size to crack it. And then above that level, you know where I'm going with this, you need even more size to then continue on. And that's not going to happen unless there's loads of volume. Because in one of those times, if it's a value at a high, someone's going to fade it back in. When it gets to the high, someone's going to fade it. When it sweeps, someone's going to fade it. So you need a real push in one-sided flows in order to continue that. You need breakout traders to come in. You need people to bid the retest. You'll need some short coverings in there for a breakout to the upside. You need all of that to happen in order for it to be sustained. This is why it tends to happen a lot of the time when tier one data comes out. It blows through them. Let's go to this line as it's taking away the time. We're not getting anywhere near this line. Okay, so we have 5 minutes till the algo time and the market on close. Daniel, what will put the channel in a niche, dude? No problem, Cal. So, Asim, you're saying if you look at Delta after the breakout, there's almost an equal amount of buying and selling Delta coming in. You need to see the exact example for it, mate, to see what it's like when it breaks out and what kind of Delta day were you in. I mean, was it like a 20k Delta? How was the Delta when that came in? Do you know what I mean? What do you think about guys slash product offering like OrderFlow Labs, making OrderFlow more visual on charts via custom studies, making yourself dependent on someone else, paid studies in general? Um, I don't know. I don't know if I can't see how, unless you've got something extremely specific that you've coded yourself with an edge that you already want to see and you think it can provide you value. There is no difference between using a heat map in Sierra, a heat map on Bookmap, or a heat map on OrderFlow Labs. It's the same thing. There's no difference. Well, there is a kind of a difference, but the depth of market on the platform, you need to have a good one. You're using Sierra or Jigsaw or potentially Bookmaps. DOM is good as well. As long as you're using one of them, you're going to have pretty good order flow, tools. But I don't think there's any, you know, the most fancy one is probably Bookmap. If you want to look at that, I think the ticking bubble noises drives me insane. I think the volume bubbles are a little bit inaccurate, but I don't know the thresholds on that. Um, I think that's definitely the fanciest one, but you pay for the visuals on that. Um, you know, and realistically, a heat map when this nonsense is going on in ES is absolutely useless, to be honest. So this is not the regime for a heat map, in my opinion. Especially on ES, maybe work on different markets, to be honest. So look at your previous post. New traders need to hear that from the day get go to get rid of BS. Is that what you're meaning? I'll basically need to explain. Here's the problem, Daniel. I can't even remember what I said, mate. I'll need to rewind it back. uh, Candleman, I would never have built my income or indicator or black box service. What are you going to do when they get hit by a bus or just stop the service, go back? Yeah. The market can only go up or down from any price as an aggregate result of 1,000 different opinions in that moment. Just be fast. Is that the comment, Daniel? There's one that's shown as deleted. I'm not sure if it's that one. But yeah, I think I think in general, if you want to use studies and if you give an edge, use them. But I can tell you from doing this for so many years, unless it's something extremely specific, there's a quality of life thing. It's not going to make you a better trader. This is a shocking market on close. Let's see if we can dump. Or we're just going to trade out POC. Wow. Look at this. This is crazy. Yeah. If this is the price action that you should be sitting in your hands, you know, this should be glaringly obvious to anyone that there's been no trade here. I mean, you could have got really creative and basically bought this sweep, but market on close is just coming out. It's not exactly been the smoothest. But horrible. It's a Friday, to be honest. I would have liked to seen a little bit more action. Then you could have carried out something. There will be. Here's the thing. There will be someone somewhere. That bought these highs thinking this is going to the moon in a Friday close of play with no volume and no data, and pretty much longed or went too aggressive into the position and basically got in real trouble down here. So there will be people that have carried that out. Yeah, if you could repost that, Daniel, that'd be great. Yeah, yeah, exactly. Sometimes it's really good. There's been a couple of streams, can't name the dates, but there's been a couple of streams where it's been really good. Like they've really, they've went parabolic into like a previous day high, overnight low. You saw tons of absorption. Then they started hitting in, and it was a big move. I actually think Trader Boy traded that. Maybe remember which one I was talking about. I can't remember. I've traded a lot of them to be honest. But yeah, this is normally the action, dude. It's normally sweepy. That's the whole point. Yeah, exactly. No, no, no. So it's not better if it's like today, like this action. This is not at all. This is not good action. The only great trade, which was the sweep of the overnight high and then a fade back in here. This was the trade. I mean, what you just buy in the open? There's no sweep again. This is not very clear. You end up just buying and closing your eyes. There's not really a trade here in this. Um, it does give you a correction of overnight high, but then it just goes straight bid from open. Um, so this is the only key one where it just goes parabolic into the overnight high and then sweeps, and then you get to fade back in. That was it. But there's a difference between you need easy flows. It's not doing anything. You want to have a balanced day is great, right? Like this, but it's already in balance. Let me get the pen out here. You want to see something like balanced day where it does this type of action, right? So it's extending above the high. You're seeing absorption happen up here, and then you've got a tight stop, and then you're basically fading it back into here. Same on the downside. If you get down here, it gives you a nice sweep opportunity, and then you're riding it back up in. That's in essence, what value is the most uh, time and volume is carried out in this area. So this is seen as a fair price for today here. Anything that's away from that, most likely in a balanced day, is going to be bought back into the fair value in here. Because when it gets standard deviations away from that, people want to fade it back in. But you need the flows, and when you're just negative delta, no one's net long or net short. There's not that much business that need to happen. Nothing. There's nothing crazy. Do you know what I mean? It's not like on days where you've got like plus 30k delta, and you're approaching this level and plus 30k. You better believe they're going to bang it and then dump off all the delta to close the session. You don't end in a complete spike a lot of the time. It's not a very common closing day type. Nice one, trader boy. That's a good. So hopefully I explained that, Bonaz. Tom, you did nothing except imagine if I get my hands except trade last month's for journaling, would it help me at all? Um, Probably not, mate, because it's their journal and it's got no relevance to you. Very typically with a journal, you want to be tracking your max adverse and max favourable excursion. How often are you having blowout days? Are you trading a mean reversion and a breakout strategy? Which one do you perform better on? Which days do you perform better on? Um, which hours do you perform better? And by that, I mean, do you perform better in Globex or RTH? Which days of the week? How do you perform on, uh, the days prior and days on tier one data points? Do you know what the tier one data points are? How do you perform when the Fed heads talk? There is nothing that you can put in your journal that is going to hurt you, put it that way. And you just need to be making notes on all these types of things. Yeah, exactly, exactly, Bonaz. But the trouble is with this, mate. I mean, put it this way, right? You could have stepped up and taken this sweep, but the delta at the time, I wasn't paying attention. Actually, we can still see it because I've not cleared. There's not really that much size trading here. I mean, there's like 700 contracts, eight. There's maybe 1,300 contracts across. Across what's that? Across 9 ticks. That's not a lot. That's not enough absorption for me to even, you know, think about. To be honest, that could have very easily, if sellers wanted to, they could have continued to bang that. You need to have a rough. That's why I draw these rectangles. Price when they get there, we start paying attention. And very typically, and the trouble is, if you start taking any sweep, right, you'll end up just doing your arson when you do that, because then you don't know what the really good ones are. You know what I mean? So you're better waiting for the good opportunities. I'm not going to sit and tell you to take every sweep. That would be bananas. These ones, when the market is extended, say this goes absolutely parabolic into this level. I mean straight up, right? There is no danger at this time in the day, if the market goes straight up, that people are not going to be taking profits up here, and you're going to get the people that are short. Okay, they need to start covering up here, so they need to become a buyer up here. And then these guys that want to get out, they need to be a seller. So they meet up here, and the guys that are profitable get to close out on these guys' positions. And then what happens once that business is conducted? Well, the bid is then pulled, most likely, and then it'll quickly snap back down here. That's the ideal play. You want to see it being out of whack. If it's a gradual, slow grind like this could be seen. So you had the overnight high, I think that was up here, right? Just we'll call it. I think it was here. Now the market's faffing around, and you notice in the space of like 10 minutes we just blast through the level. If this did this like continual, creeping motion, it's less appealing. You want to see it go aggressively into a level than you do the gradual grind of death, to be honest. Hopefully that makes sense with those drawings. You took the short in NQ around 625s. The reason, delta divergence at the previous range bottom. That was my one trade. Should have held for 25 points. Got scared and took 10. I don't know with 10 points, mate. Nothing wrong with 10 points. Look how thick the bidding offer is now, eh? Welcome back to VIX at normal levels. Now we just need ES to like 4 times that, and I'll be back at it. I don't know if you get any other questions. But yeah, let's see if we hit the overnight high, if we even get that far. One last ditcheroo so that they can sling it, but most likely we're going to end here for another week of completion. You've got some balls, mate, to be trading NQ. Cool. This is the thing. If you're on the right side of it, you're right instantly. I suppose every trade is quick on NQ. I can't imagine trading my full clip on that. Gee whiz, I would have a heart attack. Well, that's true, Daniel. That's true. I forgot about the micros. That's very true. That's very true. I suppose, my opinion with NQ, if I was to be trading that, I would probably trade a couple of micros and look to just hold for the day, to be honest with you. Thanks, Bonaz. Have a good time watching the movie, dude. Wow, they just really lifted into that there, huh? Oh, you do, Kel. Nice one. Nice one. It's a way to do it. Cumulative Delta is a really good tool to use. It's a very good tool to give you context on session, so you know where people are positioned for the day so far. No problem, guys. If anyone's got any more questions, if not, we'll look to wrap it. If you guys want to support the stream, click the pinned comment, which would be much obliged. Yeah, exactly, Daniel. I'm with you on that for MNQ. Okay, it's my bread and butter these days because the DOM is so hard to read. Also, trading micros on NQ is kind of like trading the S. Yeah, that's true, mate. I see what you're meaning. If you sling a couple of micros in there, it's the same kind of idea. But yeah, the order flow is harder to read. In terms of the limits, anyway, you need to pay much more attention to the inside prints than on the limits, especially in the was it last week. The liquidity was crazy. Just there wasn't any there. So you had to just pay attention to sweeps and icebergs on a DOM. It's slightly different. But it's good that you actually go through that because then you get to see what it's like, and typically the VIX is a good indicator of that. Anyways, guys, y'all have a great weekend, and we will catch up. We'll catch up on Monday. Take care, everyone.